Hey, welcome back to my channel. Iraqi Dinar. Today we are going to tell you when it's gonna happen. Excited exchange is happening. The Iraqi Dinar, IQD, and the Vietnamese Dong, VND, has been ongoing for years, in both financial circles and among global currency observers. Both currencies are considered undervalued relative to their country's economic resources, strategic positioning, and potential growth trajectories. The idea of a currency revaluation, a government or central bank decision to adjust the official exchange rate upward, has become a hot topic. To understand why, we need to look at the broader picture of economics, international finance, and the reforms happening in both Iraq and Vietnam. Iraqi Dinar, IQD, current situation and background. The Iraqi Dinar is currently trading around 1,300 IQD per $1 on the official market. Historically, Iraq's currency was once far stronger. Before the Gulf War of 1990, the dinar held significant value. However, decades of wars, sanctions, corruption, and instability devastated its financial infrastructure. The country became heavily reliant on the US dollar to stabilize its economy, and multiple exchange rates developed, including the official rate set by the Central Bank of Iraq, CBI, and the parallel market, black market, rate. In the last few years, Iraq has made notable progress. The CBI has accumulated large foreign currency reserves, estimated at over $100 billion, and has significantly increased its gold holdings, which now place it among the higher-ranking nations in terms of gold reserves in the Middle East. Gold, under Basel III banking standards, is recognized as a Tier 1 asset, meaning it carries full value on central bank balance sheets. This is crucial because it strengthens the CBI's ability to back its currency with hard assets, a cornerstone for stability and credibility in global markets. Iraq is also tightening control over foreign transfers, cracking down on money laundering, and aligning its banking sector with international standards. The IMF's Article 4 consultations have consistently emphasized the importance of modernizing Iraq's state-owned banks, absorbing excess liquidity, and improving monetary policy transmission. All these measures are signs that the country is preparing to move away from a dual currency dependency and push the dinar into a more respected global position. Vietnamese Dong, VND, current situation and background. The Vietnamese Dong trades at about 25,000 VND per $1, making it one of the lowest valued currencies in the world. Vietnam, like Iraq, has dealt with a long history of undervaluation. The Dong has been deliberately kept weak to support export competitiveness, allowing Vietnam to become a manufacturing and export hub, especially in electronics, textiles, and agriculture. This strategy mirrors what China once did with the yuan to fuel export growth. However, Vietnam's economy is expanding. The Turkish and Iranian currencies declined against the US dollar. The Turkish and Iranian currencies declined against the US dollar. Both the Turkish lira and the Iranian toman fell against the US dollar in trading on Thursday morning. The US dollar exchange rate against the Turkish lira reached approximately 40.65 liras for purchase and approximately 40.78 liras for sale, indicating the US currency's growing momentum and the increasing pressure on the local currency that has extended over the past years. The Iranian local currency also witnessed a further decline against the dollar, with the exchange rate reaching 93.800 tomans. On August 10th, the Iranian Shura Council approved a new bill to remove 4 zeros from the national currency, following its sharp decline in recent years due to financial sanctions imposed on the Iranian economy. Iran took this step in an attempt to stabilize its economy after decades of hyperinflation and currency devaluation. The decline of the Turkish lira and the Iranian toman against the US dollar must be seen in the broader context of regional monetary instability and global currency realignments, because when currencies within the Middle East and Asia face downward pressure, it indirectly amplifies speculation around stronger reserve-backed currencies such as the Iraqi Dinar and the Vietnamese Dong, both of which have been central to discussions about revaluation and restructuring under international financial reform frameworks. The lira's fall to around 40.78 per US dollar highlights structural weaknesses in Turkey's fiscal and monetary policy, ranging from high inflationary expectations to persistent current account deficits and limited ability of the central bank to stabilize through foreign reserves. This sustained weakness pushes investors in the region to look for stability in other regional currencies, particularly those backed by natural resources or those aligned with IMF reform programs. Iraq fits directly into this narrative as its central bank continues to accumulate foreign reserves surpassing $100 billion, along with over 130 tons of gold, making the IQD one of the most potentially undervalued currencies in the region. Similarly, the Iranian toman falling to nearly 94,000 per dollar underscores the magnitude of sanctions and mismanagement that have plagued the Iranian financial system, to the point that authorities in Tehran were forced to legislate the removal of 4 zeros from the currency to regain basic transactional functionality. This is an act of redenomination, not true revaluation, but it sends a psychological signal that the country has lost control over exchange stability, and by contrast, Iraq, which shares borders and trade flows with both Turkey and Iran, stands to gain credibility as its monetary policy continues to align with IMF recommendations and US Treasury oversight, particularly in narrowing the gap between the official. From a forex market perspective, the depreciation of lira and toman increases demand for US dollars regionally, but simultaneously it creates imbalance in regional trade flows. Iraq, for example, imports heavily from Turkey and Iran, so a weaker lira and toman actually reduce Iraq's import costs in dollar terms, thereby creating a temporary surplus in Iraq's dollar holdings. This in turn strengthens the central bank's ability to defend the dinar and manage exchange rate stability. Furthermore, the ongoing sanctions against Iran mean that many cross-border transactions must route through Iraq's financial system or intermediaries, thereby boosting liquidity and financial activity within Iraq. This makes Iraq a regional beneficiary of its neighbors' instability, positioning the dinar for a strategic upward correction in value. The August 24 speculation that the dinar will revalue is rooted in the convergence of these dynamics: strong reserves compliance with IMF reforms, narrowing of the official parallel rate gap, increased investment guarantees, and the comparative weakness of surrounding currencies, all pointing to Iraq's opportunity to assert monetary strength. When markets anticipate a revaluation, they often look for signals such as international integration steps. Iraq's recent cooperation with ICIC to provide investment and export credit insurance is one such signal, because it allows foreign capital to enter Iraq with reduced risk exposure once large strategic projects are guaranteed. In dollar or dinar-denominated contracts, the central bank can justify adjusting the currency upward to reflect increased confidence and demand. Similarly, Vietnam's path involves gradual liberalization of the dong's exchange regime, with the State Bank of Vietnam slowly widening the trading band and preparing the economy for stronger regional positioning. Both countries are also moving toward digital payments ecosystems, reducing cash reliance and improving monetary policy transmission. These technical moves underpin the possibility of synchronized revaluations under a broader global financial reset narrative. It is also important to view the August 24th date as not merely a speculative number, but as a marker of readiness after years of reform, because Iraq August 24th stands as a logical inflection point where policy readiness, market conditions, and geopolitical comparisons converge. Yes, it is going to happen. The Iraqi dinar and Vietnamese dong are both aligned for revaluation, in line with international frameworks and regional dynamics, and the market has been signaling this transition through the relative depreciation of neighboring currencies. Thus, while Turkey and Iran demonstrate the dangers of monetary weakness, Iraq and Vietnam demonstrate the rewards of disciplined reform and reserve backing, culminating in a revaluation moment that forex watchers have anticipated for years, and now the stage is fully set for that reset to take place on August 24th without delay.